The great aim of education is not knowledge, but action, Herbert Spencer. And for us, it is you learning how to follow price movements accurately, knowing when to jump in, when to jump out, how to make money in the market. We're not a stock calling service. We're an education firm. We want you to train with us each and every day. All we ask is 10 to 15 minutes. Thank you, Patreon members, for joining me. All of you who did live for the once a month live question and answer call-in sessions. Great to have you with us. All Patreon members, you have received an email with a link to the video of today's session. Also, tomorrow, Patreon members, you'll be receiving 20 weekly vertical crossovers on the S&P 500 for you to practice trade. The nice thing about today's Patreon training, and the reason I urge you to listen to it tonight if possible, or before you get your next 20 weekly vertical crossovers, is we go over how to utilize that information most specifically and accurately to help you start finding excitable practice trades that you will see be successful. Now let's jump into these charts. Stocks are up for the day. Everything else, that is bonds, gold, and Bitcoin, down. Let's jump into the S&P 500 first. We see a weekly vertical crossover, maybe in the making. Derivative oscillators still a little bit negative. Price percent oscillators trying to cross over, going up. We'll see if indeed the week ends that way. Have a nice green up candle. The third nice big up candle, no wick on the bottom. That's good to see. Pushing through the Bollinger Bands, wick on top. Everything looking nice so far, at least on the weekly. Look at the 2-day. And we can see the price percent oscillator, oh, that's heading up quite nicely. Derivative oscillator maybe gaining a little bit or almost flat, but look at things as they just move up so nicely up that trend line. That looks beautiful, so maybe setting us up for a weekly vertical crossover. Now you might say, Tom, why wouldn't we have jumped into this move back when the candle started turning green? Well, it's because we didn't have the crossover. But what about this 2-day? It's been going green for quite a while. That is pretty and nice. However, if you look back in time, you can see all the instances of where that 2-day chart would have failed you if you would have used it as a total trading chart. When did the 2-day work? When the weekly had been crossed over going down and the 2-day recrossed going down. That, my friends, was something worth waiting for, because when you lose, when you get greedy, when you don't follow the rules, you tend to get hammered. The reason we do things the way we do them is because invariably they work over and over and over again. So we're seeing what's going on the 2-day chart. What about the half day? Looks like at the end of the day, it finally managed to cross over going up. So now we will redraw that trend line and we'll get it set. And again, we'll wait and see how things continue to move along toward the end of the week and see if we actually have a weekly vertical crossover, or if this starts to die on the vine Thursday and Friday. We don't have that happen, and we potentially have a 2-day recross going down. Don't know how it's going to work out. I'll wait, watch, and see. Let's look at the NASDAQ 100 as represented by QQQ. Third, nice ever-increasing size on the candles. That's good. No wicks on the bottom. That's good. Bigger green candles each day, getting closer and closer to a weekly vertical crossover. We'll see if the week ends that way. Hopefully this derivative oscillator will flip too. We like to see both those things happen at the same time. That just makes us feel better. That means our leading indicator, which is the derivative oscillator, a triple smooth version of the relative strength index, and the percentage version of the MACD, the moving average convergence divergence indicator, which is what our PPO is, and it is the lagging indicator when both those cross over at the same time. Derivative oscillator from green to red, well in this case red to green, and the price percent oscillator crossing over the red signal line. That is typically our strongest. It gives us the best feeling. All those butterflies are things going in the right direction when that happens. You can't always have it perfect. You don't always have to have it perfect, but you need to know what perfect is. Now, let's look at the 2-day. It's continuing to move just right up beautifully. Look at this trend line. 1, 2, 3, 4, 5. 2-day candles connected. That's beautiful. Derivative oscillator gaining a little bit of momentum. Price percent oscillator continuing to spike up. Green up candles. That's pretty. Look at the cues. And the half-day chart, as it too just continues to stroke right up. We'll see how the week ends. So that's where we are as far as stocks go. Let's look at bonds. Now, bonds down for the day, down 1.03%. And what do we see as far as the weekly candle goes? Well, we see a green candle, little wick on the bottom, wick on top, small green candle. Price percent oscillator still negative. Looks like it's losing a little bit of that flatness, heading down a little. Derivative oscillator still losing downward momentum. So overall price percent oscillator still negative. We can see that the trend is still negative, even though we have 2 weeks of some green candles there. We look at the 2-day. We can see where that 2-day popped up most strongly last Thursday and Friday, and then sort of lots of indecision since then. A red open box spinning top and a green open box spinning top. Price percent oscillator flat, derivative oscillator green, losing upward momentum. Half day, you can see again where things popped up in the afternoon on Wednesday, in the morning on Thursday of last week, and then where things have either been sliding sideways, then down, then trying to track up. And then, of course, we see in the afternoon where the real loss occurred, blew right through the 2-day trend line on the half-day chart, crossed over, going down. So we'll note that by trying to draw something here on the, well, can't even really do that because we're violating that green candle. So put something there to at least give us a visual clue that we have a crossover on that half-day chart. Now, could we put a vertical line in? We could. I just don't do that on the half-days just because they're not nearly as relevant as the 2-day, which is 4 times bigger, of course, and the weekly, which is 10 times bigger. So, again, you can do that if you want to put a vertical crossover when you have that occur. You can, but I don't. So, again, I get enough of a clue from just looking at the trend line. So that is where we are on bonds. Now, let's look at gold. I was sure hoping gold would just keep moving up, but of course it's slowly dying on the vine. We warned about that with this weekly vertical crossover this last week. There were problems. I've already went over those on Friday, why there were some significant problems with it. Look what's happened as this week has started. Same way things died. Remember, after that last weekly vertical crossover going up, gold then died. We had a great down trade on gold, didn't we? But as we look at what's happening now, we can see price percent oscillator flattening, dying, derivative oscillator barely green, red, solid red, spinning top, almost a doji. Look at the 2-day, big red down candle forming. First day of this latest 2-day candle. Look how we blew through not only the 2-day trend line, but also blowing through the weekly trend line, just hammering on down. And we can see the price percent oscillator still positive, but moving down. Derivative oscillator heading down, green, but losing momentum. Half day, and again, we can just see how this continues to deteriorate. So we'll continue to watch, see how this develops. We can see where things blew right through gold's weekly trend line in the morning and gathered up a little bit of that loss in the afternoon, but that price percent oscillator spiking down, derivative oscillator heading down. So gold devolving again. I was sure hoping it was going to take off. Despite how weak that cross was, I just wanted to see gold move, but it's not. Not yet. At some point, maybe. Let's move on to Bitcoin. Down on the New York Stock Exchange Bitcoin Index, 3.17% for the day. We've talked about this a bit. See, the candles have been getting smaller over the last 2 weeks. And again, not reaching the high that we reached on the week ending the 22nd. So Price percent oscillator consequently is leveling off. Derivative oscillator still gaining a little bit of momentum. Look at the 2-day. We can see where the 2-day peaked most recently on the Thursday the 21st. That represented Wednesday the 20th, Thursday the 21st, and then sliding sideways and down over 6 days. And now over the last 3 days, some green up candles trying to move up a little bit as far as what the 2-day is showing us on the Heikin Ashi candlesticks. But of course, the derivative oscillator losing momentum. Price percent oscillator still positive but heading down. Now remember, if this 2-day crosses over going down, that takes us out. That is a telltale sign to close your trade if you are still in it when that occurs. So pay close attention to that. What's up on the half day? You can see where this half day crossed over going down back on Friday the 22nd in the morning. Went down in the afternoon, slid sideways a little bit, beginning of that next week down again, trying to track up, and then that started dying on Wednesday. So we'll wait and see how things shake out as the market moves along. That's where we are, folks. If you want to learn about Bitcoin, be with us every day. Practice trade it as much as possible. Learn. So appreciate you being with us. Got a couple of more slots open at our Patreon support at that lowest level. So if you're interested and want to support the work that we do here and get lots of great benefits, including 20 weekly vertical crossovers every week on the S&P to practice, then go over there and check us out. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.